Good day, Jeffrey Friedman, Senior Market Strategist, RJO Futures, with my daily comment on stock index futures. And I always give you the word of the day. Last week, the word of the day was volume, and I said it was very low, which has continued, by the way. And we wrapped up last week by saying that we were in an uptrend and we were grinding higher, which continued this week. This week alone, we're up 20 points for the week. We made all-time contract highs, especially in the S&P June contract, but we'll talk about the technicals in a minute. Let's get back to the word of the day. And my word of the day that will wrap up this week alone, or maybe this month alone, because we are May 30th and we are the last day of the month of May, we will have to say the word of the day is why. And that's such a ambiguous word, but the word is why is the bond market rallying in price, going down in yield, and the stock market is making all-time new highs. Now, usually the bond market or the yield curve flattening, okay, or yields going down, price going up, shows fear or uncertainty, or things are not as good economically in this country or globally as we would like, okay? Definitely deflation doesn't say expansion. This week alone, economically, we had GDP an estimate, and it did not beat the street. It was a disappointment, and I think that the number was maybe estimate negative 1.0. To me, we need to get to 2.5. It would be wonderful 3.0, but maybe we're in a new norm, as they like to project, okay? Have said that, what were some of the highlights economically? Durable goods was a positive. Housing report was positive, but you got to read more into the details. Cash buyers, big buyers are helping housing, but the average buyer getting finance might not be what the reports really indicated from the top line. Now, have said all that, we talked about GDP. We're going to talk about spending and income. Income did rise a little bit in the United States, but spending went down. Disappointment. And we all know that we need the consumer to spend to keep corporate America alive, keep margins profitable, and to make GDP a better situation. So have said all that, economically, we're just kind of plugging along. But the stock market is at an all-time high. I want to tell you that again because the trend is your friend. Now, on a technical point of view, where are we in the June S&P contract? The June S&P contract's up 20 points for the week. We're up 4.5 approximately for the year. We're on our 5th year of a bull market with very little volume. So we got things that are not making sense. The bond market is not agreeing with the stock market, or the stock market is not agreeing with the bond market, okay? So that's a flashing yellow. Low volume, making new highs, flashing yellow. Proceed with caution. Tighten up the stops, if you will. What's the target for the chartist, if you will? June S&P contract, 1940. If the market pulls back, we should stay above 1880. 1892 should be a minor support level, but really 1880, a close underneath that, would put the bears kind of in control. If we can close under 1880, then probably 1865 would be your next target. But for right now, we're near all-time highs. The trend is your friend. Proceed with tight caution. That's all I have for today. Good luck and good trading. Futures and options on futures may involve substantial risk and may not be suitable for all investors.